The housing market euphoria seems to have gone too far, and now it is flashing a danger signal, indicating that inflated home prices are at risk of facing a sharp crash. The unprecedented housing market frenzy of 2021 set one record after the other, with, of course, the help of artificially suppressed interest rates, historically low inventory levels, and the mass exodus trend in which millions of people fled away from urban centers looking for suburban and rural areas. In 1 year, home prices have skyrocketed by nearly 17%, and that's according to the national Case-Shiller index, and are now 38.1% above their 2006 peak. The relentless price growth turned homes 25% more overvalued than residential rents, approximately 50% above normalized levels when factoring in inflation, and over 25% more overvalued than income measures like the Employment Cost Index, according to data compiled by David Rosenberg, the chief economist and strategist at Rosenberg Research. The strategist said that a Black Swan event will likely lead us to a housing bubble burst. The Black Swan is the inevitable collapse in U.S. home prices. They are in the stratosphere, benchmarked against all the fundamental factors that drive valuations, wrote Rosenberg, adding that apparently the best cure for high prices is even higher prices. The truth is that home prices have soared so high that the competitive market environment has led some home buyers to overlook inspections and overlook potential risks just to finally close the deal and purchase a home, oftentimes not as valuable as they previously thought. But very rapidly, first-time and low-income buyers have been priced out of the market. And now the overall sentiment in the market is shifting from euphoria to uncertainty as buyers become more hesitant, with prices still rising at breakneck speed. A survey published last month by the University of Michigan found that only 30% of respondents said that home buying conditions were favorable, marking the lowest level since 1982. At the same time, the number of single-family homes under construction across the country last month hit 689,000. That's the highest since July 2007, when the last housing bubble was bursting. As Edward Moyer, the senior market analyst at Oanda, has warned, the housing market peak seems to be setting in. And once the bubble hits its highest level, there's only one direction home prices can go: down. This means that a real estate bubble burst is looming. Even though realtors are quick to dismiss conversations about a potential housing market crash, since their profit margins are directly affected by the growth of the current home price bubble, new evidence points that history is about to repeat itself. A fresh study released by Equipment Radar exposed that U.S. home prices have surpassed the 2005-2006 housing bubble, which of course was followed by the catastrophic 2007-2010 subprime mortgage crisis. Although fundamentals are different today than during the previous housing bubble, since today's market rise is not driven by reckless financing and speculative lending, but by record low rates, inflated prices, supply and demand imbalances, and shortages of building materials, the risk of a sharp drop in prices is once again here. U.S. home prices have risen rapidly over the past 12 months due to a variety of factors, including low interest rates, shortage of available housing, and a robust economy following government fiscal stimulus, explains the Equipment Radar report. The Case-Shiller Home Price Index rose 17% year over year in May 2021, surpassing the prior 2005-2006 housing market boom peak of 15% in September 2005. Nationwide home prices are now 38% above the prior peak, the report adds, noting that U.S. inventory of homes for sale is 50% below normal levels as of August 2021, even with the latest increase in construction levels. Another factor impacting home prices highlighted in the study is the cost of building supplies and lumber. Input costs are rising and inflation is back. This is no secret, of course, if you visit a grocery or hardware store on a regular basis. Companies are seeing their input prices increase too, and for many, it is a much greater degree, it says. The report concludes that the recent home price surges could be stickier than the 2005-2006 cycle due to higher building costs and low inventory of homes available for sale. Roaring inflation could also contribute to making higher home prices more persistent than expected, given that once prices are set at a certain level during an inflationary period in both markets and the economy, the tendency is for them to keep reaching sky highs. Unless, of course, a Black Swan event happens and pops this gigantic bubble overnight. Many economists, financial experts, investors, and even representatives have been urging the Fed to start its tapering process to fight inflation and prevent the housing price bubble from spiraling out of control. If the Fed finally hears their callings, that could be the Black Swan to trigger a burst of epic proportions. Recently, policymakers have been increasingly concerned about the soaring price of housing for both homeowners and renters, as the house price boom is driving living costs significantly up. Today, it is harder to find an affordable home in America than at any point since the 2008 financial crisis, stressed Marcia Fudge, U.S. Housing and Urban Development Secretary. Meanwhile, the fierce competition means that many properties are selling at prices significantly higher than their original listing price, which of course gives the upper hand to wealthy investors and firms as opposed to first-time buyers and lower-income families. For instance, about 10 years ago, an average house in Columbus, Ohio, would sit on the market for about 100 days before being sold. Now, a similar property sells in less than 10 days. It has never been like this, reveals Michael Jones, a real estate agent at Coldwell Banker Realty with more than 20 years' experience in Central Ohio. It's simply unprecedented. Of course, that is happening all over the country. In Austin, Texas, median home prices surged 40% year on year, according to online real estate brokerage Redfin. In Phoenix, Arizona, prices jumped by 30%, while in Detroit, Michigan, they skyrocketed by 56%. At this point, the house price spiral is feeding into the rental market and pushing rent prices to historic highs. According to Apartment List, a listings website, national median rent surged by 11.4% this year, more than 3 times the average increase witnessed during the previous 3 years. The high cost of housing keeps millions of families up every night, Jones warned. They wonder if they can afford to keep a roof over their head and still manage to keep their lights on, to pay for their prescriptions, to put food on their tables. All of this illustrates how the housing boom is rapidly evolving into a housing crisis. That's why the investor Peter Boockvar is sounding the alarm on a housing price bubble brought on by the Federal Reserve's monetary policies over the past year. Boockvar alerts that first-time homebuyers are the most vulnerable to facing dramatic losses. He says, "I feel bad for the people who bought homes over the past year because they're the ones that paid the very elevated prices," said the chief investment officer at Bleakley Advisory Group during an interview with CNBC. He argues that those who put down 5% amid historically low mortgage rates will suffer tremendous losses if home prices crash even as slightly as 10%. Boockvar says it's gonna be a world of pain. their equity is basically wiped out. For those who have owned for a while that have built up equity, they will be much more insulated, he explained. The investor explains that by maintaining extraordinary quantitative easing measures throughout the economic rebound, the central bank have created a spike in housing demand that's been overwhelming supply. The result? An astronomical rise in home prices. The problem is it stimulated so much demand that the supply side couldn't keep up. Whether it was builders who couldn't get materials or couldn't find labor or couldn't find enough lots, he noted. Considering that housing is the most interest rate sensitive part of the U.S. economy, Bukvar is worried that repercussions will be far-reaching. He says it's very hurtful for the buyer, particularly the first-time buyer who wants to own a home who's now getting priced out and then, in turn, is renting. But renting prices are going up dramatically as well, says Bukvar. He believes that all of these imbalances are clear evidence that the air has started leaking out of that housing bubble. People are now seeing sticker shock in home prices and they're backing off, he said. Buyers are calling a timeout. They said, I can't afford this, or I want to wait to see home prices cool down. For its part, the Federal Reserve is now admitting that conditions in the market are getting increasingly unsustainable. Housing prices are moving up across the country at a high rate, said Fed Chair Jerome Powell at a congressional committee last month. He mentioned that the current market is not being driven by the kind of reckless, irresponsible lending that led to the housing bubble that led to the last financial crisis. But he warned that inflated prices make it more difficult for entry-level buyers to get into the housing market, so that is a big concern. At this stage, the affordability crisis is getting so serious that mortgage applications to purchase a home have dropped for several weeks and declined by 19% year over year in the week ending August 13th. Most Americans simply cannot afford to purchase a home anymore. And as the housing price bubble expands, the threat of a massive burst comes closer. History repeats itself, and everything that goes up must come down at some point. The trick is, this time around, housing is just one of the many asset bubbles inflated by the Fed's policies, and when a reckoning arrives, which can be any time now, the entire financial sector will face a meltdown never before seen in world history.